In 2011, I received a call from Zeke Turner.
We had a portfolio of some properties that would really be considered to be industry average. We built a nice portfolio, but we really had a lot of money locked up in that portfolio and needed to align with some better capital sources to be able to grow it into what we thought the vision could be.
They had a size and scale that was probably a little too small at the time to IPO into the Canadian marketplace. What we ultimately did do, and was a fairly creative transaction, there was a Canadian REIT at the time that was selling triple net healthcare real estate. The strategy ultimately was to put the Mainstreet portfolio together with this Canadian commercial portfolio and ultimately take the larger entity public.
We worked with Zeke and his team on a number of potential IPO ideas and structures. He had about $6 million of pro forma earnings in Mainstreet.
A $260 million portfolio, cross-border with assets in the Midwest and in Western Canada as well. The pro forma market cap post the transaction was about $145 million, and Mainstreet retained about a 17% interest.
We've been involved in taking US and other foreign companies public in Canada for about 15 years. Companies from a broad range of industries, real estate and healthcare to media, manufacturing and transportation. Take Medical Facilities Corporation, for example. It's an operator of specialty hospitals from the Midwest. Or Student Transportation Inc., one of North America's largest school bus companies. Now, both these companies went public in 2004, and their 10-year total returns are in the high 100s.
If you're a billion-dollar company in the US, you're a small cap company. If you're a billion-dollar company in Canada, you're knocking towards, like higher mid cap. And when you are actually in that category, what happens is you get a lot more attention, not only from investors, but also all of the participants in the capital market.
People are looking for growth, and the U.S. marketplace is definitely an economy that is growing.
Goodman's was critical in putting a cross-border structure that worked, again, for the sponsor as well as the end investor in terms of a tax-effective structure.
Cross-border IPOs generally require thoughtful planning to develop the most effective structure for sponsors and for investors. We typically need to consider the tax regimes on both sides of the border, withholding and other taxes, regulatory requirements, and market preferences.
HealthLease was very much had a business concept and a strategy and a thesis that Zeke and Adelaide carried through to the end that sold very well. And so with the right scale, the right sponsorship, we certainly hope that there are more deals like this one.
And the deal went smoothly and ultimately was successful.
Talked to investment banks, talked to Goodman's as the attorneys, Stephen Pincus in particular, to say, what is this concept and how does it work? Learned a lot of information, and in line with Mainstreet's philosophy, we decided to take the risk. We decided to go forward and to be willing to be brave, to step out and to pursue something that we didn't know whether or not it would be successful, and ultimately it turned out to be quite successful.